Mike, thanks so much for your time. Really great to see you. Your results have come in ahead of the market's expectations, ahead of your own expectations. Can you just explain to us exactly what did provide the upside to your earnings?
Yeah, good afternoon, everybody. I think the upside came primarily out of lower than expected bad debts. Last year was obviously a particularly difficult time for our clients and customers, and we were also conservative in our provisioning methodologies and trying to anticipate what that would be for our clients. This year, we've seen much better than expected repayments, in particular from our retail clients who've benefited from 300 basis points of interest rates. We've also seen reasonable loan growth on the retail side of our business, somewhere around about 5 or 6%. And we've seen transactional activity begin to move back towards pre-COVID levels.
I was looking at your loan book and looking at the retail side of it and wondering what was pushing the demand for retail credits in your book.
Yeah, so I think in South Africa, really what you've seen is individuals who have been fortunate enough to remain in employment have been able to benefit from perhaps some lower costs in terms of transport, etc. But in particular, the 300 basis points reduction in interest rates, which was the monetary stimulus provided by the central bank in the peak of the crisis. And that clearly has increased demand for people, in particular in vehicles and homes.
Mm-hmm. Except not for corporates, because the corporate lending part of the book does remain subdued. So can you just give us an idea of what is going on there and any indications of when you do see companies pick up loans again, perhaps to even put them in the real economy to get it growing again?
So if we look at the corporate side of our business, there've been some interesting trends over the last 18 months or so. If we go back to the second quarter of last year, which was the peak COVID impact, we saw extremely strong growth in our corporate loan book and paid out probably over 80 billion rand, as many corporates and corporate treasurers drew down on all forms of available liquidity to ensure that they had big cash buffers to see them through a very uncertain COVID environment. As we got to the second half of last year, we saw a lot of those loans beginning to be repaid. And more particularly in the first half of this year, we've seen very strong performance from our commodity clients. And Nedbank has a very strong mining business. And that strong performance from our clients has translated into strong cash flows and loan paydowns. So I think before we see, more structural growth in the corporate side of our lending businesses, we are going to need to see, accelerated progress on structural reform, more policy certainty, in particular around Section 25 of the Constitution. And as a consequence of the events more recently, we are going to need to see assurances around law and order and the safety of citizens and their assets.
And just touching on those events, the riots, I don't believe that your numbers fully reflect any potential impact there, nor do they fully reflect what did happen in July with the extension of the lockdown level 4 under the third wave of COVID-19. So what is the impact on the numbers from these events?
So we have already taken those events into account in our forward-looking forecasts that we have to do from a GDP point of view. So as we got to the end of May, our GDP forecasts for this year were at 5%, and we've now reduced those to 4.2%. 0.4% of that because of the lockdown level 4. We were expecting only lockdown level 3, and 0.4% of that as a consequence of the riots and violence that we saw. In terms of the consequence on our own business, we would estimate that we've had damage to our property and ATMs of somewhere between 250 million and 300 million rand. All of that is insured through SASRIA and would have had cash losses for our own account of around about 30 million. And certainly in our engagements with clients and customers, the vast majority of those, and certainly 100% of those in our commercial property finance business, also have valid SASRIA insurance in place.
All right, good to know. I'm sure your shareholders pleased at that. Mike, let's step out of South Africa for a quick moment to the rest of the continent, ETI specifically, where you have seen a nice turnaround in earnings there. Just flesh out what's going on in that part of the world and for how long you're expecting Nigeria to continue to weigh on the bottom line there.
Yes, so very pleasing to see more than a 200% increase in our associate income from ETI. You know, like we saw in South Africa last year, ETI also had a reduction in earnings during the COVID-19 period. You know, importantly, just like we saw in South Africa, they remain profitable, albeit at lower levels, and they're now also benefiting from that bounce back. Their key challenge still does remain Nigeria, and while Nigeria is profitable, its return on equity is still in low single digits, and certainly we would expect that it will still take some time before that returns to more appropriate levels above their cost of capital.
And just staying in that region, how are you thinking about trade finance, given the implemented Free Africa trade deal and the help that a lot of smaller companies will need from lenders like yourself to action that deal?
Yeah, so certainly, you know, trade finance is a very key business of ours, and it's an important growth area. However, in respect of the African Free Trade Agreement, I think that is going to take quite a long time before it actually materializes into a meaningful change in volumes above and beyond what we see now. And actually, in the short to medium term, volumes will be more supported by the higher commodity prices than necessarily structural changes in the underlying legal frameworks.
So in the same vein, your approach to ESG financing. I mean, just yesterday or the day before, I think, we were on a public holiday. Excuse me, Mike, I'm still recovering from that long weekend. But we did have that damning report that was issued by the UN regarding the state of climate affairs. Climate has changed. We're in trouble, and we're even in bigger trouble if we don't do something seriously about it right now. Your approach to ESG financing, I mean, you mentioned quite a lot of activity amongst your clients in the commodity space. How will you be looking at this space going forward, and how will Nedbank play its role in making the planet greener?
So ESG is certainly extraordinarily important to us, and in recognition of that, we've actually just won a global award for Nedbank's progress in ESG. And if I think about the climate piece of that in particular and the energy transition, we last year published energy policy that's been recognized by most players as being market leading, that will see us transition to having zero fossil fuel exposure in our loan books by 2045. And we've got a transition path to exactly that. But in the interim period, I think that for a bank like Nedbank in particular, who is seen as a leader in the green and sustainability environment, this energy transition is an extraordinary opportunity. We've already financed around about 30 billion rand of renewable energy projects in South Africa, and almost all of our large clients, and in particular the mining clients, are all currently busy with some form of self-generation project.
I suppose, can you do more, would be the question.
So, you know, we will continually evaluate the glide path that we have set for ourselves. But what's important is to try and balance the needs of our economy today in terms of electricity supply. And we all know only too painfully the challenges that we exist with today with that longer term trajectory. And certainly that's the delicate balance that we are trying to run.
All right, Mike, let's just bring it back to the South African economy, with the economy still in a very precarious state. What does growth for Nedbank look like going forward against this environment of ultra low interest rates?
So we would certainly expect to continue to grow our business from here. We said together with our results announcement today that we already have reasonable certainty that earnings growth for the full year will be up by more than 20%, that being the JSE requirement, and we'll give an update later as to exactly how much more than 20%. And certainly if you look at the medium-term targets that we've set ourselves to get back to pre-COVID earnings sometime during 2023, that would imply continued strong growth in our business over the medium term.
Resumed your dividend payment this time around as a form of returning value to shareholders. But what, again, does that look like going forward? We've got a number of companies embarking on share buybacks as another form of creating value. Is this something you're considering?
So certainly one of the key features of our results would have been our very strong capital ratios. So our what's called CET1 or the real shareholder funds capital ratio increased to 12.2%. So that's now higher than it was before COVID arrived. And, that's really facilitated us resuming dividend payments. Our interim dividend, as you said, at R4.33 was declared at a cover ratio of 2.5 times cover. Our policy for dividend cover is between 1.75 and 2.25 times cover. So we were slightly outside our policy, or a slightly lower dividend than our policy would have guided to. But what we did say in these results is that we, based on our current forecasts, we do expect to declare our final dividend this year back within our normal 1.75 to 2.25 times cover range.
Right. Mike, you've never been a man to shy away from the politics, so I'm gonna give it to you. The latest cabinet reshuffle, your take on the ministry, the new ministry that the president has appointed, and also the significance of his reappearance today at the Zondo Commission.
So in terms of the cabinet reshuffle, we're certainly sad to see the resignation of Tito Mboweni as finance minister. And think he's done a good job in extraordinarily difficult circumstances to hold the fiscal line over several months. We welcome Enoch Godongwada's appointment. He's somebody who markets know well, and I believe he is a safe pair of hands.
And the president's appearance at the Zondo Commission today, paying attention?
Unfortunately, we've been in results meetings back to back all morning. I have absolutely no idea what he said this morning.
I think that is understandable. But Mike, last question. Just as we talk about rebuilding this economy and inspiring confidence and creating jobs, what role does Nedbank plan to play in addressing some of the social ills here in South Africa, which many say that banks have a big role to play in terms of improving access to finance to smaller companies, to women-owned companies, and to also black-owned companies?
Yeah, so banks, wherever they operate, have an extraordinarily important role to play in socio-economic development. And, I really couldn't go into everything that we do in a short interview, but we have, extensive programs in terms of broadening the reach of our business. Actually, banking penetration in South Africa is one of the highest of equivalent emerging market countries anywhere in the world. And we can continue to extend that through our digital products. The national payment system is currently working on rapid payments, again, to improve access to banking and financial services. We have very deliberate programs aimed at small and medium enterprises. We have numerous skills programs in place. And one of Nedbank's flagships would be the single largest corporate participant in the Youth Employment Service. And only 2 weeks ago, we facilitated 1,900 youth with a one-year job opportunity.
All right. Mike, your invitation or your request for a longer interview to discuss rebuilding this economy is accepted. We'll reach out to your communications people and we'll have a longer conversation there. But thanks so much for your time. So that was the Nedbank CEO, Mike Brown.